Folks, I'm L.A. Little, and this is today's TA Wrap. We take a look at these markets and we do it from a neoclassical perspective, asking ourselves what happened last week and what does it tell us about the coming one. I do this show once a week, every Sunday night, live at 9 o'clock Eastern Time, here from the base of the Rocky Mountains. I'm glad you could take some time to join me. It was a busy week last week. Markets pushed higher. We had the Fed meeting on Wednesday. That got everything started. And if we look at this piece that I did put up on the show, actually not so much on the show, but here on the site, you can see the intertwinedness of the markets. Here's the Fed tapering on Wednesday and what happened afterwards. And what do you see? You see the large cap, industrialized, Japan, Germany, S&Ps, they're all either flat or higher, and then you saw the emerging markets, Brazil, China, all getting hit on the Fed news. That's going to play out. That's going to play out over the next few weeks as we see this taper unwind, if you will, begin to take place, and we'll see how that affects the markets over time. But for right now, markets really don't care. The markets are on a binge higher, so to speak. They've been working higher. Here's the S&P 500. And let's go through some of these charts. We have a swing point break, multiple swing point highs, broken. You can see them here. Swing point high here, swing point high there. The breakout, just what you would order if you were wanting to get bullish into the end of the year. You got a breakout. That's multiple swing points on a single time frame on the S&Ps. Volume expands. Folks, that's just saying this thing's going to try to grind higher into the end of the year. So you got your breakout, grind higher, expanding volume, right? And you had expanding volume back on the Fed day, expanding volume on Friday. Now Friday was quadruple twitching on the options. It was also some rebalancing that was taking place. All of that led to huge volume, but volume is volume. And volume was there on breakouts on all these indexes. S&Ps, you see an extension here on the weekly as well. And if you go over and you start looking at any of these others, we can start with the Dow next. You've got extensions on the Dow, although Dow sold off a little bit at the close. Dow breaks over swing point high on Thursday. If you go over to the NDX, you got a breakout on the NDX as well. So the breakout is here. And you can see it right across the board, right? Breakout here, volume expanding. Big long, move higher, continuing. That means what's going to happen now, if you start thinking ahead, the way you need to count these, this is a swing point low, right? It's off of this bar. That's 1, 2, 3, 4, 5, 6. That means you're going to get a low down in this area. That's going to be the intermediate term time frame low, and that's going to be the key area when this market finally tries to decide to come back, right? So if this extension keeps pushing, then it's not an issue. But if you get a digestion consolidation up in this area, this prints as a swing point low, and you're only, in this case, what would we be? That low would be 33.46, and right now we're trading at 35.31. So you're a couple hundred points away, but it's still comparatively, after this kind of a move, 200 points can actually happen, right? So consolidation, drift down, eventually that becomes potentially an issue. And of course, on the dailies, you would have swing point lows that would print in the same sort of area. Here's a 33.18. That's the 33.59, which corresponds with what looks like it's going to be this area. It's going to end up being a swing point low. So you can see, if I carry that analogy forward over here, you can see this area becoming the critical area. So if this doesn't extend, and it should try, but if it doesn't extend, and this ends up being consolidation in here for the next 3-4 weeks, or even if it extends and then comes back into this area, you're not that far away from critical area on a longer term time frame, and that's what you're always worried about. But right now, that's not a concern. The only concern is just how far is this thing going to go. If we look at the IXIC, the NASDAQ composite itself, big push up over the swing point highs, expanding volume. And the only one that's trailing, hasn't got a new volume or new high yet, is the Russell. The Russell did get over a swing point high. You can see it here. So that's one, and now you're sitting at the next one. And I would be very surprised if it doesn't try to take it out tomorrow. Expanding volume, price shooting higher, right? What can you not like about that? Just what you'd order into the end of the year. So volume big on Friday, that's going to be it. You've got Christmas this week, you got New Year's the next week. They're both in the middle of the week. So that means you're going to get Tuesday early close, off all day Wednesday. You're in the holiday season, so there's not going to be much volume anyway. So the volume is really going to dissipate and disappear, which typically means that you just grind in the direction of whatever the trend is. And clearly that trend is up right now. So I believe that's what you're going to see happen. If we walk over to the world markets, this had been an issue for about 2 weeks. And so far that issue has been met with some buying. It looked as if it was going to try to break down farther. It looked like we had, and I've got the CACs up first. This is the weakest of the group. You had an ABCD structure. It looked like it was going to set up a big ABCD structure to the downside, but that's not what happened. In fact, what happened was the continuation of the bounce off the Fed news. So now you're coming back up, and even if it does set up an ABCD structure down, it's not going to be nearly as bad as it was before. What it's doing right now is what we talk about a lot when we look at the charts, and that is that when you break a swing point low, and in this case this was the one that was broken, that becomes the retest regenerate area. That retest regenerate area is right there. We're only, looks like, about 10 points away. I would think that's where the resistance is going to be found on these swing point lows as it comes back up to test. I'd be very surprised if this just continues higher. As a matter of fact, when we look at the other couple of markets here, you'll see the same scenario, and that is that they're coming up into a zone, a retest regenerate. It's more than 6 bars. Just like on a bullish retest regenerate, when you come back up on more than 6 bar, after more than 6 bars across, for the first retest, it's almost a slam dunk. It's a 90%er. This thing's going to find resistance and come back down. That, if you envision it, and let me clear the screen here and we'll do it again. If you envision what that means, then you'll have the potential for some sort of an ABCD structure to set up to the upside, which maybe gets it up to the tops of these retest regenerate zones. So we'll see if that's the way it sets up. But right now, I would think this is almost done in terms of the CACs moving higher. If you walk over and you look at the weekly, you're coming right up into the thick of resistance. That's where the consolidation was prior. This was where the breakdown was. So you're coming back up to test. Here it's less than 6 bars, so you don't have that same situation. Matter of fact, it's right into that zone right now. The retest regenerate zone here is this prior swing point low, and if we draw that in, you can see it can get up to the top of that area. Now, if you combine the two charts and you think about the top of this, what is that? That's 42.86. If you come back over to the tops of these, 42.67, 42.66, and 42.86. And that's not right. This one's lower, 42.42. Now, if you did an ABCD structure, now you have volume here. So if you did an ABC structure down, that could take you back up to the top of this bar. That's 42.77. Again, the top of that swing point low, 42.86. So you can see how that area on the way back up, even if it were to get that high, that simply would be a fulfillment of a retest regenerate potential on the longer term, in this case weekly time frame. So you're really not out of the woods until you get over this area. So that will be the key for the CACs, and that's also going to be the key for the FTSE. It's set up the same way. If we look at the FTSE, so the English market coming back up, it's going to do the same sort of thing. It doesn't have the swing point low over here that was broken. What it does have is it has two big bars here that were broken. The bottom 66.36, the bottom of this one, which is the retest regen zone, 66.14, the top of it 67.26. So again, looks to me like you're coming in more than 6 bars, right? So if you pull it up and you mark it up again, this is the low that's coming back into. It's more than 6 bars across, and with more than 6 bars across, that probability goes up pretty high that when you come into that area the first time, it's going to get sold. Now it came in with enough volume, just as our markets had volume, so that says, hey, yeah, we can test into there. We'll see if volume is there tomorrow or not. I suspect you're not going to see any volume, and that's probably where the failure is going to occur. Now, the strong one, and the one that got pulled down and really was the buy on the pullback, was the German index, the DAX. And the DAX goes all the way back to the top. That top was 94.04. It trades up to 9400, got to 9413, so it went over, back under after an extended move, but there was volume. So if you have volume, that says you can go back up and test. So I suspect you're going to see this test again tomorrow, and then we'll probably see it pull back as well. And the German market pulling back, being the strongest one, probably doesn't pull back that far, maybe as far as this swing point high it broke. Again, that would be a retest regenerate on this bar on the way back. So you can see how you're fighting resistance on the way up, strongest index, volume expanding, probably test again tomorrow, has no volume. That probably gives you the pullback. The US markets, they actually want to extend a little bit farther. They probably extend straight into Christmas. The European markets, looks like they will probably come back sooner. They'll front run us on that. And then if we go over to Asia, you can see the Asian markets still reeling. Now, one of the stronger ones was the Taipei market, the Taiwan. Remember, it went up and tested the highs both on the weekly and on the dailies, came back. It's going to regenerate, try to get back up there and do it again. That's one of the strongest ones. And the Japan, the Topics, that's also a strong market. It's up testing that high again. 15,942. They closed it at 15,870. They're going to hit it again. We'll see if they can get over it. They actually got the break on Thursday on the daily. I would expect a test on the weekly this week. The weakness, though, is in China, and you can see it here in the Hong Kong market. So the Hang Seng on the weekly, you can see the consolidation, went to the highs, fell up there at the highs, coming back. On the daily, much more damage. Big spike up, it didn't hold. Now you're coming back down, and now you've actually got some fairly significant resistance right in that area. That's where the red line is. That's where the failure is. Big bar down. Testing into this bar again, failed. Not enough volume as it went back into it. It's going to come all the way back. It looks to me like it's going to come all the way back to the support zone. I tested into it yesterday or Friday. Should test into it probably one more time. But this is the area it's going to work now. It's not going anywhere. Yeah, it can bounce around in this area, but that one is showing weakness. And if you look at the best ETF for China, which is CAF, you can see the same sort of thing here on the Chinese ETF, coming back into the big bar. Top of that's 2359 on this ETF. This is the mainland China ETF, China Share Fund, Morgan Stanley. The bottom 2370 on Friday, again 2359. I would expect you're going to see it come back in there and test into this bar, and this will probably be where it tries to hold, get a bounce. You'll see a bounce in the Hong Kong market. Maybe you'll see those stronger markets move back up and test the tops again, but that's probably where this thing is going to go, right? Get an ABCD down. Matter of fact, it already had a little ABCD down that's finished, but get a push back up here and potentially set up a larger ABCD structure to the downside. Takes you to the bottom. That would be where it's trying to get to. All right, so Asia is probably going to be more problematic than Europe near term, but it's not a huge issue yet because it's only in some of the markets, in particular the Chinese markets. You do have problem with anybody that supplies them, though. For example, if I look at Australia, issues there, right? They got a nice big bounce up, but they're coming back up into an area of retest regen that they're probably going to fail and come back. And if I look over at like Brazil, you've got the same sort of thing. Brazil can't even lift. It tried, failed, tested that swing point high, had a little bit more volume, will probably test again, but this thing is back in doing a retest regen itself. You see this play out over and over and over. Here's your retest regen. And I believe that actually was after 6 bars. That low was 51,290, and we got to, no, we did. We got into it. We got in within 6 bars. So this isn't really a retest regen. It's just back into resistance. So yeah, it looks to me like it had decent volume on Friday, but everybody did. Looks to me like it's still going to fail, pull back a little bit more again. So anybody supplying China, struggling. Anybody else in Asia, still doing okay. Most of Europe, problem swept under the rug for right now. All right, let's look at our sectors and see if there's anything there. The market's clearly, domestic market's clearly strong. Let's see what the sectors look like. IYT. Okay, let's clean this up. So the IYT goes and breaks a swing point high and has volume. That will also try to test the swing point highs, the highest one. So you got a break on this time frame, and one of the few that hasn't broke already is going to go after that one. And that's just a consolidation taking place on the longer term. Looks strong. Let's see what the semis did. Now the semis was the one sector that looked like they would break down. They never did. Wednesday, huge reversal bar, and it's up testing, breaking new highs. Doesn't have the volume, it's suspect. That one can try to grind higher just like everything else. Let's see about the stronger ones. XLB testing highs. Going to continue to test. There's a resistance zone there now, but it probably has the volume to get through it. XLE, this will be one to watch. Hitting it with volume, didn't get over it yet. That's, this has been probably one of the weakest ones outside the XLP and the utilities, right? It struggled, but it's coming up, it's hitting it with volume, swing point high, gets over that, it will go after the next one. Has been a big range trade, right? And it's still in that range. There's like two levels of ranges here if you look at them. You know, you got the top range up here, you got the bottom one down here. It's right there trying to get over to get back into the top range, and I suspect it's going to, because the rest of the market's going to pull it. XLF had been very strong. Let's see what that one's doing. Right at the highs. This one's going to try to break out. It's right there. And this is with most of these, if you're looking at them on a dividend adjusted, right? They all gave dividends this week. So they're, you know, if we're looking at non-adjusted data. If you had the adjusted data, these would be over the highs already. So it just looks to me like they're all going to try to break out. XLI has already broken out and extending. That's exactly what you want to see. XLK had already broken out as well. I take that back. It hadn't. It was right at the verge, and it's right there doing the same thing. I believe they're all going to show breakouts. XLP is still struggling. Anything interest rate sensitive is struggling. XLU, same thing. XLV, new highs, I believe. It's going after the new highs. It was down here. Yeah, it's got a little 2, 3. Yeah, actually that one didn't move Friday. So that one's still trying to get over the December 11th bar. If you're looking for something that's lagging that they're going to play rotation into, you know, the IYT, right? This one, the XLE, those are the ones that you'll probably see the rotation into if they get over their December 11th bars. Of course, swing point highs aren't that far away, but there's two of them up here. And that would be a break of multiple swing point highs on multiple time frames if it were to break. And you got decent volume coming back, so it looks like a good shot. XLY, consumer discretionary, had already broken out. And it's still trying to break the other one. So it's right there on the cusp, also good volume. Looks like it wants to try to break out. Auxiliary markets, the main thing over there was really the bonds. I mean, if you look at the bonds, and we've got both the daily and the weekly up here. So if you look at the bonds, you've got a consolidation at the bottom, which is not where you want to see your consolidations, right? You really want to see them get out of here. And so you had the ability or the attempt to break out the bottoms again. You came close testing, you were testing with some volume down here, but then Friday you got the reversal, you know, couldn't take it out after what, 5 bars. Now you're back up, you broke a swing point high. This one's going to try to get up here, but actually it has something else that's working on it right now, which is this low that it's coming into, and that's going to be hard to get over and stay over. So the low that you want to watch, if you're watching this, is this one. 104.27. We closed at 104.25. So 2 cents under it. You know, on a daily basis, you got to get back into that bar. If you get into that bar, then you can attack these swing point highs and potentially break it out to the top of this one. But you got to get over it, and right now it hasn't. Consolidation-wise, you can see it's way down here at the bottom still. Bonds are important. If the bonds break, these equities aren't going to stay up here. And so that's, to me, that's a key market to keep your eye on. Let's see what the dollar did, and then I'll take a couple questions. So the dollar, what do we have here? So you got a reversal. So the bottom was 21.69. We got to 21.71. It's amazing. It goes right into that big bar and fails. Looks like a little pullback coming, but that's probably going to set up an ABCD structure on the way up, right? So you have this push up, some sort of a pullback, maybe into, it's kind of hard to tell because there's no good spots. You'd have to go intraday to look. Sets up potentially an ABCD structure to try to get it to the top of that big bar. That's the bar it's working on right now. That price point low. So it's working on 2 of them. It's got the November 1st bar, and the one it's going to try to get into is November 7th. It looks like a little retrace and then an attempt to go higher. And that would hurt gold. And if we go to gold right quick and look at gold, you know, gold, there's a big issue with gold because gold really is just going to come back and try to do a retest regen. We actually talked about this, I think, Thursday. and that is that on a weekly, gold had held that low, didn't have the volume, right? The volume's not there. That should lead to a bounce. We got a little bit of a bounce started on Friday. I would expect that bounce tries to take us back into the swing point low, because it's probably going to happen within 6 bars. You can get to the top of it. That would take it a little bit deeper, get you back up into this area, and then we'd see, actually that's probably being generous, it's not going to probably get that high. What is the top of that? That top is, that low's top is 118.31. So 118.31 is not nearly that high. It's actually about the, it's actually below last week's weekly high. So, the bounce to be watched is the daily. The daily has to get back over that. If it doesn't, this thing's going to turn around and come right back and try to break out these lows. And structure-wise, that's going to set up another ABCD structure. So it just did this ABCD down, right, and overextended again like it usually does. The other one, if it comes back, and let's say it gets back all the way to the top of that, that would get you to there and get you an ABCD structure. That would still take you low enough to break this out. And maybe they just come underneath this, cut underneath it, and there's no sellers down there. Maybe it will be that way. I don't know. They did test it already, though, so if you're a gold bug, you don't want to see this thing tested too much. You want to see it get out of here. And it tested it last week and failed. So bounce, and then we'll see where it wants to go. All right, let's take your questions right quick. So when can you get some Apple? You already should have some Apple. if you're I'm not sure what you're interested in. Always. So the China Mobile deal announced to start January. Oh, I see. Okay, so I didn't catch the news. I haven't looked at anything. I've been with family most of the day. So so Apple reports. Maybe that's why we saw the big spike here, right? I mean, I've got the futures up, and big spike up to start the day on the futures. I assume, given what the X has just told us, that's a result of Apple, right? So Apple's going to pop tomorrow. Let me get over to that screen and we'll take a look at it. So if I look at, let me get these two in. So Apple and Microsoft. Okay, so Apple was trying, actually Apple gave you a buy, right? And I think X is being funny. X making the comment, when can I get some Apple? And now he tells us it's China Mobile. Apple gave the buy, right? It was a perfect setup. I mean, Apple comes back into this big bar. Top of that bar, you can see the support zone is right there, right? It comes into that bar right here. Volume, it's less, right? If you do the numbers, you got top of the bar is 539 a quarter. Volume there was 22.6. You come back into it, 20 million shares, so 2 million less. You get to 538.80, right? You go into it, you don't have the volume, you pop back out of it. Now, it tried to get over it Friday and look like a failure, but I guess this news with China Mobile is going to pop it back up and let it go back after that high again. So it looks to me like Apple's in a range. So, on a more serious side, you just let it come back to the top of the range, see if it can break out or not, and then you just play this range for a while, because that's where the trade is on Apple. The other question here is Microsoft. Let's look at it right quick. What do I think about that Microsoft weekly and daily? Microsoft is waiting on a CEO. So Microsoft comes in on a weekly, comes in to do the retest regen. That's it's within 6 bars. So that kind of makes it dangerous, right? I always talk about 6 bars. 6 bars tends to be from the research I did in the book, the latest book I published about a year ago. 6 bars is the number, and you got 1, 2, 3, 4, 5, and you come back into it. So within 6 bars, probabilities are not that bad to get all the way to the bottom. Okay, well, the bottom on the weekly, that's a long way down. Okay, so that's a bad thing. Now, if we go look at it on the daily, it's not nearly as bad, right? Here, it's after 6 bars. Now, after 6 bars, it still did a test to the bottom. You can see it there, right? That was the buy. More than 6 bars, you finally come back to retest and regen. And is that true? Hang on a second. Let me clean this up and look at it one more time. No, that's not a breakout though. That's just coming back into support. So it comes back into support. It gets all the way to the bottom of this bar though. 35.47, got to 35.53, almost to the bottom. Volume not nearly there, right? Flips around. It's back over the bar now. But I just wouldn't, I don't see the trade here because the problem is this. We already talked about the weekly. On the daily, you got resistance right here, right? And it's coming right into it. Volume there, much more than what you saw here. I don't think Apple's going anywhere. If you get lucky, Apple comes back to the top. Not lucky, but the most I could see it is coming back up to here, right? And your risk is here. You got to put your stops underneath it. So you're almost the same distance, right, between your risk and your reward. So it's just not there. No trade there for me. All right, folks. It's going to be a very slow week. I've got to post the ending numbers when I'll be on this week, but I probably will only air a Monday and Tuesday at most. Of course, I don't even think I'm going to air Tuesday. And I'm doubtful I'm going to air Thursday. Maybe I'll air Thursday if I don't Tuesday. So a couple days this week I'll be on. I think it's going to be a slow week. It's going to be a grind week. They're going to try to grind higher. They're set up to do that. They got everything they wanted last week to do that. The technicals point that way now. So, expect that. I mean, that's the way it works. And then, next week, probably a little bit more iffy, some sort of pullback somewhere as a result of just pressure from overseas and some sort of a pullback. Maybe it won't matter because I don't think you're going to get a big pullback anywhere right now. Thanks for being there. Have a great night, and I'll catch you next time. Good night, folks.